support material 2. First bit is just the scope. Support material 2 is focusing on administration, where we're looking at returns and we're looking at assessments. Last week I gave you a small task to consider in terms of the tax year. I asked you to try fill out some of the events that could occur over the 12 months for an individual. So we'll look at that tonight and we'll discuss what possibilities could arise in terms of tax, in terms of receipts, maybe payments, and all of the background regarding what we covered last week, which was basically theory around how the system works. Tonight we're looking a bit deeper in terms of the actual administration. So we're going to look at the process. So how does an individual go about appealing or objecting to a tax assessment? That's something that we need to look at, we need to discuss. We also need to look at things like when does the assessment become due? When do we have to object by? Okay, what are the deadlines? What is the scope? And then there's obviously rules around how do you object, how do you appeal, and what happens if you don't agree with the process. Well, there's always other routes that you can take to resolve the dispute. So that's what you're focusing on here in terms of the theory. Again, there's no real calculations here in study unit 2. Calculations generally come up later on when you actually look at more of the content. So you need to cover income, you need to cover deductions, you need to cover provisional tax in terms of first and second payments and so on. Once we've covered that, then you'll see then UNISA does tend to test more of the application in terms of calculations. Right now it's still theory.
Yes, sir.
So the first bit to consider is the word reconciliation. When you see that word, what are you thinking about?
Well, when I see the word reconciliation, I think of something being settled. So probably two sides that probably were not agreeing on something. And then once they come together, they're able to come to one sort of, or rather come to a consensus on one particular thing. So
yeah, that's good. I like the way you described it, where you used the word consensus. So that's basically you and SARS agreeing on something. And what would you guys have to agree on?
On the money that you have to pay.
Yes, or
you have to pay
the money that you have to receive. So don't always think about SARS as being a payment-only type of institution. Some instances, a refund can apply.
Yes, sir.
So it's not always negative in terms of you have to pay SARS every single year. Not always the case. Depending on how you structure your tax affairs, you're either going to have more of a liability or you could get a refund from SARS depending on how you've planned over the last 12 months. So currently, are we in a new tax year?
Yeah. Yes, sir.
Yes, we are. When did the old tax year end?
It ended in February.
Yeah, 2 days ago,
29th.
right?
Yes, sir.
28 Feb 2018 was the end of the last tax year, and that was obviously the 2017/2018 tax year. That was what we were looking at in terms of the budget speech that was given last year. This year, we're looking at 2018/19 in terms of the new tax year. So anything that takes place from 1st of March 2018 all the way through to Feb next year is in a new tax year. None of that is going to affect the current reconciliation that has to take place once a year for an individual. Okay, obviously companies have it slightly worse in terms of more administration. Companies, depending on how big they are probably going to have other things to comply with, like VAT, which is something that we'll touch on and discuss.
Yes.
And there are other considerations as well that they need to provide for when looking at meeting the legislation, i.e. the rules, so that they don't get into trouble with the tax man in terms of having to comply with the letter of the law. Okay, so the first bit is, what does the word reconciliation mean? Your answer is great. Okay, I didn't write an answer up here. Let me just write it in instead of type it in. Okay, reconciliation, as you said, is a way to well, you said consensus, okay, and it is a process of checking, actually, because you are going to have records that you are going to believe are correct, and so will SARS. SARS is a separate institution. You are individual, okay? Who else is part of this relationship?
You, SARS, and perhaps maybe the company that you work with
exactly,
or work for, sorry.
Yeah, the company that you work for would be the employer.
Yes, sir.
Good. So the employer is basically in the middle here, because the employer has to submit returns to SARS, and they need to submit returns to you, because they're the ones that are going to be keeping track of what you've received in the form of income. So that's what happens every single year from a tax point of view. A tax reconciliation process is going to take place where we call that a return, because you are going to have to submit a document to SARS, and that's normally called a tax return. Okay. For an individual, it gets done once a year. Who needs to register? Any idea?
The taxpayer.
A taxpayer, good. And what determines a taxpayer?
Well, someone that receives income.
Correct.
Yeah.
Good. Right, so income is the big question mark that we need to answer in terms of, well, are we or aren't we earning any income? Right, it doesn't matter what age you are. You can be young, you can be old, you can be a juristic person or a natural person. As a taxpayer, you are responsible for paying your share of the taxes that the government needs to obviously collect in order for them to provide us with public goods and services. That's the most important bit, and that was what we looked at last week. So we spoke about reasons why we have a tax system. Okay, we're not special or unique. Our country is just one country of many that does the exact same thing. Right, they have rules and laws around taxes, and the citizens, i.e. human beings and companies and other, are going to have to pay towards the system. And the system is there in order to provide us with the most benefit as a country, to keep the country going. Because as we said last week, certain things as a human being or as a company, they're not incentivized to provide us with. So for example, you as an individual, you wouldn't go and build your own roads, you wouldn't provide your own clinic, you wouldn't build your own school, because there's no real incentive for doing that, and the government is actually responsible for that because they need to look after their citizens.
Yes.
Okay. Something else that we need to discuss is the profile of the taxpayer. You get a provisional taxpayer, and they pay provisional tax. This is something that's covered up more in study unit 3, where they talk about the provisional tax payments. So when looking at a tax year, you're obviously starting with the 1st of March, and then you're ending with 28 or 29, depending on whether it's a leap year or not, of Feb, which is the current year that we're going to be focusing on in terms of income and expenses. But we don't call them expenses, we call them deductions or allowances. Okay, it's just a fancy word that refers to something that you've had to pay, but depending on the rules, you may or may not be able to claim it as a deduction. So some things you can, some things you can't. But that's just something to consider here in terms of provisional and other taxes. They need to be paid during each year of assessment. So something like pay-as-you-earn. Pay-as-you-earn is a tax on your income that you derive from an employer. So as an employer, they're going to be withholding a certain portion of your salary, and they're going to pay that directly over to who? SARS.
Yes, sir.
Okay, and see, that's administration. That's what we're going to be looking at tonight in terms of this whole idea of admin, returns, and assessments. The admin is looking at like the back office work that people need to keep track on in order to then declare everything to SARS, so that SARS can then run an efficient system whereby they're collecting taxes on behalf of government. Remember we said last week, who collects the taxes?
SARS.
Correct, the receiver of revenue. Good. The Commissioner of SARS is the head in terms of that function. Okay, they're responsible for collections. And who spends the taxes that they collect?
The government.
Correct,
or Parliament.
government. Good. So municipalities, the national government, they're going to be taking that budget, i.e. tax money, and they're going to allocate that to different areas in order to build the country.
Yes, sir.
A few other questions to consider. When should a person, natural or juristic, it doesn't matter what type of individual you are in terms of being a person, okay, register as a taxpayer? When do you think we should register?
Well, I think you should register as soon as you start to receive an income.
Good. Okay, so it definitely relates to income. Okay, and another applicable reason or let's say motivation to register as a taxpayer is as soon as you're deriving some sort of benefit, okay, in the form of something, even like something as simple as a medical aid. Okay, if you're paying a portion of your income towards a medical aid, right, you would be silly to not register as a taxpayer, because certain things, so for example, even a retirement annuity, if you as an individual are contributing towards a retirement annuity or any other form of retirement vehicle, it would be silly to not register as a taxpayer. And the reason for that is there are benefits that you can make use of in the form of a deduction.
Yes, sir.
Okay. So yes, when you start earning income, you need to register. Right, even, let's talk about a baby. Could a baby be required to register as a taxpayer?
Yes, sir.
They could if this baby had inherited, let's say, a massive amount of inheritance.
Yes, sir.
Okay, so maybe a loved one had passed, and that loved one, in terms of a will, had left a newborn baby millions of rands in terms of assets. Okay, technically, that baby would be seen as a taxpayer because technically that baby has derived some sort of benefit in the form of income, okay, or assets of value that came from maybe a trust or maybe a will or something along those lines. So it doesn't matter how old you are, it doesn't matter how young you are, you can literally be taxed in the womb, and you could even be taxed on your death. Okay, we spoke about death taxes last week. It's called estate duty.
Yes, sir.
Okay, so when you die, that's the death taxes. Okay, so everything that you own would be subject to tax according to this in terms of rules, and you would then have to pay, well, not you because you'd be dead, but your estate, okay, your wealth, okay, your assets. Your assets will be taxed. And once you've paid tax on your estate, it will then be given out to all the beneficiaries. So maybe a newborn baby, maybe a loved one, maybe a family member, maybe a charity. It doesn't matter who gets the estate, the estate after you die. But before that happens, there needs to be this estate duty that applies in terms of legislation. Okay, that's just how it works. So, as the saying goes, there's always something certain in terms of life. Okay, it's obviously human beings die at some point, and taxes. Everyone has to pay their fair share of taxes. So how do you know if a person is registered?
Well, they should have a tax number.
Very good. Okay, and that number is vital because that number identifies you as a taxpayer, and that would be your identity that you would have with SARS in terms of declaring what you earn and claiming maybe some of the deductions that you have spent money on in terms of medical, pension, retirement, etc. Okay, so important is getting some sort of registration, okay, as a taxpayer. For a company, companies also have something called a VAT number. You've probably seen that when dealing with certain companies' invoices. Companies that have VAT numbers are ultimately registered with who? SARS.
Yes, sir.
Okay, and the reason why they do that is because they're a taxpayer. But at the same time, because we're looking at VAT, they're also collecting taxes on behalf of the government. Okay, on behalf of SARS. Because think about it, does SARS collect VAT from you and me, or does SARS collect VAT from the companies?
Well, they collect from everyone, from me and the company.
Not actually, because who is actually going to be collecting it?
Oh, the company will be collecting it on
so
behalf.
they're acting as an agent on behalf of SARS.
Yes.
Okay, so the government does collect it from you, but it's indirect. That's why we spoke about direct and indirect taxes. Okay, last week there was a table. Indirect taxes are taxes that are levied in a roundabout route, whereby you don't pay it directly to SARS. So, for example, have you bought something recently?
Yeah.
What did you buy today? Anything?
Didn't buy anything. No, I didn't buy anything. No, I didn't leave the house today. Yesterday I was sleeping.
Okay.
So no.
Okay, so when last did you buy something, and what was it?
Okay, perhaps maybe on Friday. On Friday I had a meeting with some lady, and then I think I bought us food.
Okay,
that was like the last time I really used.
Yeah, that's a good example. So food, something as simple as food. Even if you just buy bottled water is going to have 14%. Well, 14% was the last tax year. So according to your assessments, you are going to have to use VAT at 14%, because remember, your niece is going to test you on 2017/18 tax tables.
Yes, sir.
Currently, as we stand today, in terms of the current budget that was presented at the end of Feb, VAT is actually 15%. But notice how that's only applicable from this tax year going forward.
Yes, sir.
Okay, because that's how the system works. The system is always slightly delayed in terms of the implementation. Okay, because rules have to be set ahead of time, and then those rules need to be implemented. Okay, so you spoke about buying food for the lady that you had met with. Okay, the chance of the bill that you had at the restaurant or at the store, wherever it was, chances are that there were items on that menu that had carried VAT, which was VAT. And how do you know that company is registered? Well, on the actual till slip, if you kept the till slip, you could look at it and you would see the VAT registration number of that company. Right, and that's how companies identify themselves, because they need to then register and pay their fair share of the taxes. Right, and every individual should also then make use of the same process, because the sooner you register as a taxpayer, the better. And the reason for that, as I said earlier, is there are certain deductions that you can actually make use of that helps you as an individual. Right, and the only way you can actually enjoy those benefits is if you do decide to register as a taxpayer. Right, from what I remember last year, you mentioned that you haven't registered as a taxpayer, but you are working and you are doing jobs and that, and you're running a business. I'm assuming that maybe you have or haven't worked for an employer in the past. Okay, but if you have, you would have received a document, a payslip. Okay, the payslip is obviously going to have information about how much you've earned. And every year, companies give out IRP5 forms to their employees.
Yes.
Okay, you might be familiar with that, an IRP5.
Yes, sir.
Okay, as an individual working for an employer, it doesn't matter whether you're full-time or part-time, it makes no difference. You can even be contracted as a contract staff member, or it doesn't matter. As long as you've worked for an employer during a specific tax year, the following year you would then receive a IRP5 form, because that company that you had worked for would be obligated to declare the amount of income that you had earned as one of their employees. That's how the system works. So SARS is actually going to be looking at information from three parties. They're going to be looking at things from the individual, in terms of point of view. They're going to look at things from the employer, and SARS is going to look at their rules, and those three individuals are key. So everything okay, filters through to SARS. That's what happens. So information goes from employer to SARS. Right, what happens every year? We just spoke about a tax return. The tax return part, I actually rubbed it off. Let me just write it in. The tax return part is when you as an individual, you are communicating with SARS. That's how it works. Okay,
Yes.
so employer is going to be giving information to SARS about your occupation, your job, your salary, etc., etc., and they're obviously going to want to confirm that with you as the taxpayer. So that's the form of checking. Right. The reason why SARS collects data and information from your employer and from you as the individual is so that they can reconcile, okay, notice that word, reconcile, i.e. to check that you've paid your fair share of the actual benefits, okay, in terms of having to contribute towards the big picture and the government creating and providing us with certain public goods and services.
Yes, sir.
Okay. The last question is just about employees register as taxpayers. We spoke about that. Employees should always register as a taxpayer because as an employer, you are obligated to register, well not register, but you're obligated to withhold pay as you earn, okay, so i.e. employees tax on your employees. And if you're the employee, it's a good idea for you to register with SARS because as I said, there are deductions that you can make use of and you would then be able to declare your current status with them based on occupation, based on income, and if you're lucky and you've structured your taxes appropriately, you'll actually get a refund rather than a liability that you would have to pay. So again, it all depends on what's the relationship between you and the employer, and then obviously the employer is going to give documentation and information to SARS, and then it's a process of checking. So once that takes place, and that normally takes place around March, not March, we're in March, in May. Okay, so May,
Yes.
June. Around that time, you'll see employers are generally going to be issuing those tax certificates, i.e. IRP5, and that will be given to employees. And then employees are given a certain amount of time from the date that they've obviously opened up the registrations, opened up the assessments, okay, where you submit your returns. Okay, so do we all have to submit a return? What do you think?
Yes, sir.
The answer is actually no. Okay, you don't all have to submit a return. There are instances where if you are only employed by one company, okay, and you're not deriving any other benefits in the form of rent income, okay, or dividends or interest or any of those other income line items that could possibly arise in your taxable income calculation, you would not have to register as a taxpayer. Okay, if you go into any SARS branch, or if you even go onto the website, you will see that they do give a it's almost like a concession, if you will, okay, whereby SARS says if you've only got one employer and you've been working for them for the entire year, you didn't change job, you didn't do any other work, you didn't earn any income or any interest income or rent income or anything like that, then actually you wouldn't need to pay, okay, or submit a return based on your history. Right, so SARS wouldn't really require you to declare your income and to show all your expenses. Having said that though, most individuals still choose to register as a taxpayer because, as I said earlier, there are certain deductions that can be made use of, especially for someone running a business. Okay, small business, medium business, large business, it makes no difference what type of business. There are certain benefits for meeting certain requirements in the form of a business that would then make use of or benefit from those deductions. Okay, which we'll look at later on. Okay, you'll see in chapter 3 they talk a bit about that in terms of your role and responsibility as a taxpayer. When do you have to pay? Why do you have to pay? And if there's problems with the actual amount, okay, in terms of dispute, then that gets taken further to try to find a remedy. Right, so it all depends on what your actual goal is. I would always recommend paying your taxes, okay, keeping everything in line with the law. The only reason why I'm saying that is because there's some sort of track record. Okay, SARS will have your records since the first assessment that you've made. So as soon as you've become a taxpayer and you've logged onto the SARS e-filing webpage and you do all your taxes and all of that, the thing is they've got your details, they know who you are, and every year it's a good way just to prepare and present that information to avoid any problems with the law later on in life or later on in the business. Okay, it's always important to stay up to date with what's happening, and the only way you're going to do that is by paying your fair share and being closer to the process, because that helps with understanding and that helps with making decisions as well. Okay, so just backstory, okay, just touching on some of the concepts we've looked at before. I've put a note here about the time. Okay, so this you might want to add to your notes in terms of when. Okay, so if I'm looking at a taxpayer, earlier you told me if someone is earning income, they need to register as a taxpayer. That was correct, but how soon do they have to actually register? 21 days after being required to. Okay, that's legislation. Right, in terms of the requirements. So, have you earned income over the last, I don't know, let's say 12 months? If so, have you then met the criteria of being a taxpayer from the legislation outlined by SARS? The answer would be yes. As a taxpayer, you'd be obligated to register as a taxpayer to pay your fair share. Okay. As I said earlier, there are instances where if you meet a certain criteria, i.e. you've only been working for one company, okay, as an employee, you haven't received any benefits, no medical, no pension, no other, and you've been paying pay as you earn and all of that, there's no need to actually register as a taxpayer. That's the requirements, right? Because it's administration. Okay, remember, people don't really like admin. Admin is one of the maybe more boring tasks that an individual could do, and no one really likes doing those tasks. Yes, you do get some people that like it in terms of admin and planning and organizing and all of that, but the large majority don't. But it's important because if you don't know what the rules say, and if you break or not follow any of the rules, it could create problems later on in life. Alright, so I know you mentioned that you're not a taxpayer. Okay, so you said you haven't registered as a taxpayer. Is there any reason why you've chosen not to register?
No. Personally, I do have a tax number, okay. But like the company isn't. But I personally, and I think one of the reasons for that was because money that I get actually comes into my personal account. I think I just use the company name for for invoice purposes really. But I personally do have one.
Okay, so that's good.
And on my invoices I do put it there anyway.
Okay, good. So you mentioned that as a taxpayer, as an individual. So yes, you're running the business separate, okay, but you would be a director as part of that business. And if you're a director of the business, that makes you a provisional taxpayer. Directors of companies are viewed as provisional taxpayers.
Yes, sir.
Okay, we don't quite understand what that means. We will have a better understanding of it later on, okay, in terms of what you are required to do. Right, so the short answer to that question is, well, everyone should register as a taxpayer. Right, the main consideration is, well, when do you have to register? Right, the book and the textbook in terms of theory refers to 21 days, okay, meaning as soon as you've been, let's say, brought into the tax net as a taxpayer, you would have to be, you'd have to buy and comply with that actual requirement. Okay, so buying goods, selling goods, as long as you are registered as a taxpayer, whether in your personal capacity or whether as part of a broader business, that needs to be made use of in terms of the legislation. Okay, so making use of the registration process, which you can do online. Nowadays, it's a very simple and easy process that most people can do. Even the more elderly that might not be as familiar with technology, the programs have been developed quite simply in terms of declaring what you have, confirming it with SARS, and then either receiving a benefit in the form of a refund or a liability. Okay, and it's not a bad thing if you're earning a lot of income and you're going to have to pay a high amount of tax. Okay, remember we said earlier last week that the reason why businesses need to pay taxes is to grow the broader economy. Because as a private business, there's no incentive for you to provide any public goods for the public as a whole if it doesn't create or provide you with any benefits.
Yes, sir.
Okay, so how do we know if they're registered? Obviously, we're going to see what their profile says, and I've added this here just to show you that in the 21st century, okay, so as we stand today, paying your taxes is probably one of the easiest and most simplest ways to comply with the rule of the law, purely by logging online and registering for e-filing. Okay, e-filing was a big talking point a few years back when it was still relatively new, and when it was new and when we didn't have e-filing, a large majority of the population had to physically go in to a branch to make payment or to square up their taxes with SARS. And do you think you're going to be waiting a long time in SARS, or would you say there's an opportunity cost with regard to paying the actual taxes?
No, sir.
Yes, there's a lot of time that takes up.
Okay. Oh, okay. Yes.
So
okay.
the opportunity cost would be the time that it takes for you to go into a branch, to register, and to pay your dues. Right. Nowadays,
Yes, sir.
it's so simple, it's so quick, and it's so fast. As long as you've obviously declared all your income from your various sources, as long as you've got the proof for all of that and you've submitted your documentation, documents to SARS, and once they're happy with your compliance, it's a simple process of literally logging in, filling out your details, checking that everything's right, and then just sending it off. That's how simple it can be, based on individuals that don't have a substantial amount of, i.e. retirement funds, okay, retirement annuity, it could be medical. Right, so there's the process. Earlier I drew a little diagram. I've given you one diagram here to work with. Right, so let's answer the first question. How does SARS know how much to tax employees and businesses? What do they use to determine that?
Well, they use information obtained from, I suppose, your proof of salary or your proof of your payslip, if I could say it like that. And then I suppose for companies, they use your annual financial statements.
Right, both answers are correct in terms of different sources of information that would require us to do some sort of check in terms of maybe an audit. Okay, most important role here is which one?
The one at the top.
Why?
Because SARS has to communicate has to get communication from both sides, being the employer and the employee, in order to be able to conduct its business as well.
Registration, as I said earlier, is compulsory in some instances. Some instances you don't have a choice. Okay, this is what the scenario is, and that is what you're going to have to pay, okay, based on the rules and laws within the country. Right, so this is the process of reconciliation. You've got the employee. Okay, so let's talk about Unam as being the employee. Right, have you worked for an employer over the last 12 months?
Yes, sir.
You have. Did you receive a pay slip from them?
No, not a pay slip.
No, you haven't. Okay, well, in that instance then, if it has been over the last 12 months, and if you are still working for that organization, or maybe you've left and you've changed, can you still source and gather that information from them?
Yes, sir.
Of course you can. Right, so companies, irrespective of what happens in the interim, right, so companies can change over time. Okay, we know that. Companies that start out aren't generally the companies that will end with. Right, companies also evolve, they also change, they need to adapt. Right, so when looking at an individual, individuals also need to adapt. Right, so if I'm looking at SARS, the employee and the employer, okay, you said that over the last 12 months you had worked from an employer and you hadn't received any documentation, right? Or you did?
Well, not and like an official pay. So the one thing I really received was like a proof of payment.
Okay. All right. So
Yes,
they've proved that they've paid you a certain amount, which is fine because remember they're stakeholders. Okay, stakeholders
yes,
are accountable to government. Okay, to shareholders as well. So as a stakeholder, if we're looking at the role and the responsibility of the employer, they need to satisfy SARS in terms of income. So they tell SARS how much you earned. Okay, they
yes,
fill out documentation that gets given to SARS. Alright, so will SARS have an idea of how much you earned?
yes, sir.
Yes, they will. Right, the employer is then going to give you information regarding your earnings, and they call that an IRP5 form.
Yes, sir.
Right, and that's what the employee is going to give the what the employer is going to give the employee. Okay, so if that's the case, if the employee is going to receive an IRP5 from the employer,
yes, sir.
does SARS know what's on that IRP5?
Yeah, they should,
Yes,
sir.
they do. But is that the only thing the employee is going to have in terms of income? Possibly, but sometimes
Yes.
not always the case. Because as an employee, can you have a medical aid?
Yes, sir.
Yes. Can you have a pension?
Yes, sir.
Yes. Can you have a tax-free savings account?
Yes, sir.
Yes. Can you have savings and investments and other assets?
Yes, sir.
Definitely. Right. So will your employer know all of that?
Yes, sir.
No, they won't. They won't know all of that.
Oh, not all, but then on some of the things like pension, depending on whether the employer contributes to those type of things, won't they know?
Yes, possibly. So if you do have a company contribution, then they would know what you've got in terms of maybe medical or pension. Okay, but will the
Yes.
employer know whether you're investing or not? Will the employer know whether you've got a tax-free savings account or not?
No, sir.
No, they wouldn't. Why? Whose business is that? It's the employees. Do you agree?
Yes, sir.
Okay, as an individual, do you have to tell your employer all of that?
No, you don't.
Aren't required to. Okay, so there is a level of confidentiality. And that's why, who is SARS going to get that information from?
From both employer and employee.
Yes, they are going to have to track the information from the employee and ask the employee to declare the income that they have received from all
Yeah.
their various work or companies or
Sources.
businesses that they had conducted or done business with.
Yes, sir.
Okay, and that's something to consider in terms of the process of reconciliation. Right, it's always the process of checking. Right, IRP5 is what you are going to receive as an individual. Right, if you were a company, what would you have to submit to SARS?
I think it's an IRP 14 or something. Oh no,
there are
financial
specific
statements.
forms that need to be filled out for companies. Okay, that's correct in terms of like the admin. But generally, just to keep it straightforward and simple, as a company, would you have to register and pay? Definitely. And SARS
Yes.
is going to want you to register and pay purely because, as a company, you should be deriving a more income based on the operations of the business.
Yes, sir.
Okay, so generally companies are the ones that are going to be paying the most towards the budget in terms of collecting taxes on who? The employees. Okay, because think about this.
Yeah.
Every single employee that's currently employed with an employer who has a contract, who is employed for a certain period of time, are they going to have to pay taxes?
Yes, sir.
Definitely. And SARS would then want to collect from the actual taxpayer in terms of meeting their obligation. Right? And
Yes,
that's
sir.
why it's important for an employee and an employer to both be registered for tax purposes.
Yes.
Okay. Right, here's an example. After the income tax return is submitted, IRT12 or IRT14, SARS will provide an assessment, okay, and that's called an ITA34, which is going to be provided to you by who?
By SARS, sir.
Exactly. And what is that going to communicate? It's going to communicate how much is outstanding or how much is owing or how much is refundable and that's the assessment. That's the process that takes place. Okay, so every year you're going to have to be earning and paying taxes on your income. At some point in time, SARS has to, not SARS, the business has to submit that information to SARS. And then a few months later, you as an individual do a process of a reconciliation, because then you reconcile what you've earned with what SARS has been presented with in terms of your business. Okay, so I'm sure you running a business, you have a private company running photography and so on. Have you had a situation where your employee, well, not really employee, because you are the employer, as a business owner, have you ever thought about hiring staff?
Not so much hiring, but a lot of things that I do, I do sometimes like outsource. For me, I found that as much as it's sometimes more expensive to have casual staff, I suppose, or to have freelancers.
Yes.
That you pay depending on jobs, but it is still cheaper, because if perhaps, let's say I have a quiet month, then I'm not obligated to pay them.
Okay, yeah, so definitely, as you said, it depends on the size of the business as well. Okay, the smaller the business, generally you are going to be seen as a sole proprietor. Okay, and as a sole proprietor, the sole proprietor would then have to declare their income to SARS as an individual and pay their due share of taxes to the system. Okay, but if you're a sole proprietor running your own business, okay, you don't have any employees. You're the only one that's rendering a product or a service. Okay, do you need to register for tax purposes?
Sorry, sir?
Would you have to register as a taxpayer if you were earning an income?
Yes, sir.
Definitely. Okay, it would be a good idea to, because then you would declare all the revenue that you received, that would be the income, less all the deductions that you had made in terms of medical, pension, etc. Okay, and most companies, not all, but most companies tend to provide things like medical aid, okay, and other benefits. So is it an incentive to operate as a registered business in terms of paying their employee tax and all of that?
Yes, sir.
Definitely. Okay, so on this example, I've given you a South African resident, Mr. X. Okay, Mr. X is employed with ABC. Okay, the employer has provided him with an IRP5 form. Alright, so that happens generally around May. Okay, and then that was during the 2015-2016 tax year. Right, then there's also a note here about the annual salary. So annual salary in terms of cost of company was $1 million, and Mr. X makes various contributions, which are reliable deductions amounting to $100,000. Pay as you earn on the IRP5 form is $250,000. Right, so in terms of taxable income, just tell me, what do you think is taxable?
I think annual salary would be deductible, would be taxable.
Yes, only the salary, right? Yes, because it's considered
so far.
Okay, so does SARS use receipts or accruals? What system do they use for taxes?
I think they use receipts, sir.
They use both, actually. It all depends on what you're going to be looking at.
Yes, sir.
Okay, the most common one in terms of a company having to pay taxes to SARS would be for pay as you earn. That's probably one of the biggest taxes that the government would collect from their citizens. Okay, and that amounts to billions and billions and billions of rands in terms of money that was paid over to SARS as government. Right, and then obviously, who's responsible? Is it for government to produce? It's the employees of that company.
Yes, sir.
So as an employee of that company, you'd be required to perform, and then you would have to submit a return. Okay, just in terms of tax liability, is a liability different from income?
Yes, because liability is owed and income is received.
Okay, so income is what you receive or what you get in terms of the company's operations. But if I'm asking you a question here about the difference, let me ask you this. what do you pay? Do you pay the income or do you pay the liability?
Well, you pay the liability what you owe them.
Yeah, you pay the income tax on the income that you've derived. Does that make sense?
Yes, sir.
Okay, and that would be the payment that you would have to make with SARS. Okay, so the payment that's made with SARS is always going to be looking at your role. Okay, what role do you have in the bigger scheme of things? Right, a company is going to have to register all their employees. An employee is going to have to register themselves as a employee, and then obviously if you've got employee and employer with SARS in the middle, there's a level of oversight or monitoring that can take place, right? And generally the system is quite transparent, meaning what you earn is what you declare, and what you declare is what's going to be communicated to them by the employer. So it's almost like open lines of communication, but notice how the employee doesn't really directly direct queries with the employer, because who's responsible for collecting the taxes?
The employer.
No, collecting the taxes. SARS.
Oh, SARS.
Well, yeah. In terms of maybe long-term or short-term requirements. Okay, but it doesn't matter. The key here is, well, when would you have to register as a taxpayer? It would be when you are required to make a representation of how much you've earned versus how much you've maybe paid in the form of dividends and so on.
Yes, sir.
Okay, so just remember, tax liability is very different to a tax income line item. When we looked at the skeleton, okay, of the taxpayer, what was the first line item? It was income. Do you agree?
Yes, sir.
And then after income, you had what?
Deductions. Yes, sir.
Okay, so that's definitely very important from an individual point of view, because you're going to have to know exactly how much you've earned versus how much you should be paying in the form of your taxes.
Yes, sir.
Okay. Alright, so there's a timeline. Example. Record all the info on the timeline and identify the key considerations. Okay, so we're going to relate this to an example that we just saw now in terms of Mr. X. Okay, but it doesn't matter who Mr. X is. Okay, I'm going to use you as an example, okay, or you can use someone else as an example. It doesn't matter, but let's just think about things that can take place during the year that will affect your taxes. Okay, so what transactions would take place during the year that would affect your income tax?
Well, you could. Well, I kind of with this answer, with this question when you asked, I think in the last class, I didn't really make reference to anything specific. I just kind of made like for example, I wrote here you'd receive income, you probably pay expenses, you probably purchase new assets, your company could probably receive gifts. Yes. Of some sort. You could probably pay or receive commission. Good. And maybe make donations to the local, maybe for your CSI, your CSI projects, or things like that. So those are the things that I jotted down.
Okay, nice. That's a really good answer. So there is a lot that can take place during the tax year. Very important, though, is how does it work? Well, what is the current tax year? 2018 to 2019. Do you agree?
Yes, sir.
We are currently on, I think it's the 5th today, I think, March.
Yes, sir.
Okay, so are we outside of the tax year? Yes, because it's a new tax year.
Yes, sir.
Right, so during this tax year, okay, there's the question mark. What did you earn in terms of income? What are you going to claim in terms of your deductions?
Yes, sir.
Okay, that's the major line item in terms of income and expenses that the company is going to have to provide for. Right, and then the company is going to review its operations. Okay, what happens around May? And IRP 5 is given to who?
Given to the employee.
Correct. And what does the employee then do with the IRP 5? Well, a few months down the line, they open the tax return period. Okay, and then individuals can go submit a return, right, where they are going to declare their income and their expenses in line with the tax tables. Right, and once that takes place, then there's going to be a payment, perhaps, okay, to settle the account, or there might be a refund, something that you're going to be receiving back from them, because over the life of your engagement, you might have paid too much taxes, depending.
Yes, sir.
Okay, and it has to be transparent in terms of the information that's provided to SARS. And remember, who has the right to disclose that information?
Employees and employers.
SARS, actually. Okay, because remember, they're the ones conducting and researching and finding information about the employees that's at the company.
Yes, sir.
Okay, so that's what happens. IRP5 given somewhere in May. Is the IRP5 going to have something like a medical aid written on it, or a pension written on it, or anything like that?
No, sir.
Well, it depends on what institution you're working with. Okay,
yes,
if I'm working with a company that offers a medical and a pension benefit, will I see it on my return?
If you're receiving a medical benefit?
Yeah, medical aid, medical benefit, and other.
Yeah, I think so. If it's something that appears on your payslip, then yes, sir.
Okay, good. So definitely, as an individual, you have to convey and express that information. But is that information reliable and accurate? It should be. Okay, what happens if it isn't? SARS is then going to do an audit to go back and check those companies that had or had not paid in order to make the books balance, in order to then check that things are being completed ethically and in line with the law.
Yes, sir.
Right, this you're going to see more of later on when we look at the actual process. Okay, you'll see each of these topics are different topics in the actual study guide. Okay, study unit income I think is 4, if I'm not mistaken. It might be a bit later on, but that's something that you would look at in terms of income. What defines income? What makes up income? Then you also need to look at deductions and allowances. Again, it's a study unit chapter. Okay, I think that one is like 6 or 5 or 6. Right, and then you look at those deductions, and then you see, well, what am I as a business, as a taxpayer, obligated to pay? That's what you're looking at. Right, don't forget this format. You saw this format on the previous set of notes. You remember? Format is very important. Why? It's the structure and layout. You have to have a method to generate an answer.
Yes, sir.
Okay. Then we'll look at taxable capital gain later on. Again, it's a separate study unit. Alright, so how is that template different from this template? What is this template got that the other template doesn't have?
Well, this one has prepaid taxes, sir.
Yes. Okay, so you could look at prepaid taxes as what? A form of tax that was paid when? Prepaid meaning ahead of time. Do you agree?
Yes, sir.
Biggest example of prepaid tax would be pay as you earn. If you're an employee and you're employed with a company, when does that company pay your pay as you earn over to SARS?
Well,
do they wait till the end of the month?
No, sir.
When do they pay it?
I think they pay it during the year, sir.
Every single year, basically, during the year. Good. Okay, and the only reason for that is companies need to declare all their income. Right, and that's very, very important for you as an individual. All right, do you have to then confirm that all those details are correct and accurate?
Yes, sir.
Yes, you do. Because who's liable for those payments?
I am.
The person engaging, correct. So the person wanting to buy those assets would have to pay for those assets to ensure that what they said was correct is what they're going to be providing for.
Yes.
Okay. Right, looking at this, last week we spoke about a progressive versus a proportional versus a regressive tax income system. If I talk to you about a progressive tax, what do you think am I talking about?
Something that... Sorry, sir?
More or less tax?
Well, I think it's something that progressive is something that I suppose kind of increases the more you earn. Well, the more you earn, the more you pay. Then regressive is, if I remember, the more you earn, the less you pay, I think. And then what was the other one that you said? So, there was another.
Sorry,
There was another. There was a third one that you said. I can't remember. Progressive, regressive.
You were just talking about payments.
No, I'm talking about how much you. I'm talking about you. I thought you were asking me what are the different kinds of like between progressive. Oh, it was provision.
Yeah, we answered that question. You told me that the more you earn, the more you pay, right?
Yes, sir.
Yeah, and then you went a little bit more detail in terms of like the role, and then what are you asking about now?
Oh, okay, no, never mind this. So that's okay.
Okay, so just to summarize, progressive means what? More you earn, the more you pay, right?
Yes, sir.
Okay, and then we said this is going to be collected from who?
Taxpayer.
Yes. Which type?
Oh, do you mean direct or indirect?
No. Which type of taxpayer?
An individual.
Or a trust.
Yes.
Right, and this is for 2017 to
2018.
Okay, so this is the actual tax table that you're going to be given in the exam. Right,
Yeah.
I updated the slides, so I've put in the correct tax tables that are applicable to you in a 2018 tax year, based on assessments that would have covered the previous year's budget in terms of income tax.
Yes, sir.
Okay, so looking at this, what's the highest rate of tax that an individual would pay on their income?
The highest rate, 45%.
45, correct. And the lowest, 18.
Yes, sir.
Right, do you agree some people earn more than that, some people earn less than that in terms of an average?
Yes, sir.
Okay, it doesn't matter what you earn. There's always going to be a portion of it that will be paid over to SARS. Right, and it can be paid over to SARS in the form of like a supplement in a way. Okay.
Yes, sir.
Alright, so when I say supplement, something like additional. So paid over like additional taxes basically. So if I'm in a higher tax bracket, do I pay more tax?
Yes, sir.
Yes, I do. I'm going to have to pay extra. Right, and if it's a trust, the trust is seen as an individual. Okay, they also have a provisional income tax act, or not act, but rules that they need to follow.
Yes.
Okay, so I just want to show you how this works. You'll see there aren't any workings in the actual study guide regarding the theory in chapter 2. I've given you this purely as a test just to show you how you would actually account for the taxes that X would have to pay. Mr. X earns how much in a year?
He earned 1 million.
He earned 1 million. Do you agree?
Yes, sir.
Okay. So if he's earning $1 million, what is he going to have to pay tax on?
Is it not the million minus deductions?
Yes. Okay. 1 million less deductions and allowances. Okay.
Yes, sir.
So did he have any of them?
Yes, so he did.
Yes, he did.
100,000.
Yeah, he had allowable deductions amounting to 100,000. So how much tax is he going to have to pay? Well, we need to calculate on the taxable income. Do you agree?
Yes, sir.
Okay, so very simple calculation. Taxable income is going to be 900,000. Do you agree?
Yes, sir.
Which bracket do I fall in?
He falls in the second last one.
Second last one. Correct.
Yes.
Okay, so what SARS does is that you'll never ever pay tax twice. Okay, and it doesn't matter how much you earn, you're always going to receive the benefits that you would have derived in a lower tax bracket. So no one loses out. So even though this taxpayer, in terms of earning 900,000 over the last year as taxable income, even though they earn 900,000, are they outside of the smaller tax brackets? Yes, they are. But do they still reap the benefit of the earlier tax brackets? Yes, they do.
Yes.
Okay, so it's a very fair system, and it's very well run and managed in terms of how government collects the taxes. So now, how much do I pay on this? Well, do you agree any taxable income above this is going to be charged at 41%? So
Yes,
the
sir.
tax liability, notice how this is different to tax income.
Yes, sir.
Okay, because income is how much you actually earn that must be taxed. The tax liability is, well, how much did you earn? Now, how much tax do you have to pay? Does that make sense?
Yes.
The difference.
Yes, sir.
Okay, so what is the excess? Well, I'm going to have to take 900,000 and I'm going to have to subtract 708, 310, and that's going to give me 191. 690. And what is that going to be taxed at? 41%.
Yes, sir.
Okay, so if I times that amount by 0.41, that gives me 78,592,90. Right,
Yes,
and what
sir.
does that represent? A portion of the amount exceeding the 708,000. You still have to pay this bit, which is the base, which is covering all of those amounts basically before.
Yes, sir.
Okay, so how much
would
tax do you actually pay? It's the 78,592 plus the 209,032 gives you a total of 2,8,7,624,90. Okay, did Mr. X pay any prepaid taxes?
I think he did of 250.
Yes. Okay, 250 is pay as you earn. When is pay as you earn paid over to SARS?
Or during the year.
Yes,
Second.
during the year. So do you agree this is at the end of the year? So is Mr. X going to pay more or less taxes? He's going to pay less taxes because he's already paid some taxes. He already
Yes,
paid
sir.
25,000. Do you agree?
Wasn't it 250? 250,000.
Sorry. 250, another zero. Okay, so the difference that he's going to have to pay is how much? The 287,624.90 less 25, 250. So
It's 37.
624,90.
Yes, sir.
Okay, that's the difference between a tax liability and taxable income. They're two very different things. Right, so in an exam, what must you always work out first? The income or the liability?
Then you should look at the income.
Definitely. Okay, you have
Yes.
to look for the income because the income tells you how much they're going to be taxed on, and then the taxable liability calculation is determining the amount
What's
of
left
payable,
over?
the
Or
liability,
change, yes.
in other words.
Yes, sir.
Okay. Alright, this I actually want to look at next week. I've just given you a scenario here looking at Mr. X. I want you to
Yes.
give me some recommendations about Mr. X in terms of what could he do to improve his situation. Okay, from a tax point of view. Right, and also, what happens if Mr. X is not satisfied with the assessment? Also something to consider.
Yes, sir.
Okay, that's obviously called what? An objection, do you agree?
Yes, sir.
Okay, so if he's objecting,
Yes,
is
sir.
Mr. X going to have to still pay the tax liability?
Yes, sir.
Why?
Because he hasn't proven. He first has to prove that it was wrong.
Correct. So he must pay his taxes irrespective of whether he agrees with it or not. Do you agree?
Yes, sir.
Taxes
Yes,
have
sir.
to be paid. If you don't pay your taxes, then there's going to be penalties and interest.
Yes, sir.
Okay, so if Mr. X doesn't agree with what came about, should he still pay the tax liability? Yes. But then he should hope for a remedy in terms of the tax dispute, and hopefully if his case is successful, will he reap the benefit then later if they say, well, yes, it was an unfair situation and they had mistakenly charged more than they should, and the taxes are obviously going to be reversed. Okay, so must you always comply? You have to. You have to always comply in terms of your responsibility. Okay, because just because someone else made a mistake. So, for example, if let's say SARS had made a mistake processing your application, okay, they've made the mistake. If they've made the mistake, would they have to prove that?
Yes, sir.
Yes. Right, they have to prove that they've made a mistake. And if you believe that you shouldn't be paying a certain amount of taxes, do you agree that's something that you're stating? So now, who's going to have to motivate that? You or the tax or SARS?
I have to, sir.
You would have to, okay, because you're the one accusing SARS of not covering a specific area in tax. Right, and that's why earlier on last week you spoke about a DTA, double tax agreement. Why do those DTAs exist? It's because everybody who's anybody, if they're all looking at operating in the same sort of space, they all need to provide for their own taxes.
Yes, sir.
Okay, and the biggest thing to consider is, well, what can they do to reduce taxes? Right, and that's something that we need to look at in a later chapter. Okay, just to give you a hint, it's called deductions and allowances, basically.
Yes, sir.
Okay, can they appeal and object?
Yes, sir, they can.
Of course they can. What does object mean? Disagree.
Yes, sir.
Okay, and if you appeal, that means you disagree with the judgment.
Yes.
Okay. Alright, so make sure that you are familiar with the compliance. Okay, you have to follow the rules and laws based on what's in the tax tables
Yes, sir.
and what's in the legislation. Okay, those things guide you in terms of your application. Right, and we will always use the tax tables when approaching questions because those tax tables won't change for that specific year. Okay, just keep it as is. Whatever last year's tax tables were in terms of 2017 to 2018, even though it has changed. So in reality, we're living in a world now where the taxes have increased, but we're still going to be doing calculations based on what happened last year.
Yes, sir.
Okay, so you have to pay your tax and keep proper accounting records. Failure to comply with the rules will give rise to penalties and interest. Okay, there is a difference between tax avoidance and tax evasion. I don't think I included it here. Let me write it down. Which is allowed?
Tax avoidance.
Good. Avoidance means you're paying taxes, but you're paying the least.
Yes, sir.
In line with the law. Okay, so I'm not going to be manipulating the rule of law. Okay, I'm going to be paying everything in line with the law, but I'm going to try avoid paying more taxes. So if I take out a medical, can that help me avoid paying more taxes? If I take out a medical aid.
That allows you to pay less.
Paying more taxes.
Yes, sir.
Yes, it would. What about a retirement annuity?
Yes, sir.
Yes, it
That's
would.
different.
Yeah, so certain instances allow or provide for certain benefits. And as a taxpayer, because you're a taxpayer, you have to disclose that information to SARS.
Yes, sir.
Okay. Alright, then I've given you a note here about the disputes. This comes straight out of the textbook. Right, why do we need a dispute resolution process? It's because who is going to be collecting taxes?
SARS, sir.
Correct. What does SARS use to follow the rules? They use the rule of law. Do you agree?
Yes, sir.
Okay. And the rules that they're following are set by who?
Set by Parliament.
The government, Parliament. Yes, exactly. Good. And in terms of an individual, is the individual going to want to pay more or less taxes?
They want to pay less.
Less taxes. So do you agree that if the one wants to pay more and the one wants to pay less, there could be a conflict of interest?
Yes, sir.
Okay, because now there might be a scenario where you're saying I'm going to pay less, but the tax authority, i.e. SARS, is saying you're going to have to pay more. So now how do you fix that problem?
Well, you guys have to come to some sort of consensus or to some sort of resolution or reconciliation, rather.
Good. Okay, so that's something to consider. And if you do come to a consensus, then that's fine. So the first place that you're going to have to, let's say, deal with in terms of trying to seek remedy is with who?
The ADR.
No, not the ADR, the company.
Oh, yes, sir.
Okay, so if you don't agree with the taxes that you're paying, who are you going to deal with? The company. Okay. So the company and SARS, they're going to be dealing with the dispute. Do you agree?
Yes, sir.
Okay. So if the company says, well, no, they're not supposed to pay this much. Okay, who are they going to deal with? SARS. They're going to communicate with SARS. Right.
Yes.
If SARS isn't happy with what they've provided for, and they disagree with it, or let me put it this way. The company's earning income. What happens every year? The company needs to pay taxes to who? SARS.
Yes, sir.
Every year, SARS is going to then reconcile what the company has earned in order for the individuals to pay tax.
Yes, sir.
If there's a dispute, the first place in terms of step would be the SARS taxpayer account. Okay, so the company and SARS, they're going to try to address the issue amongst themselves.
Yes, sir.
Okay, that's what they're going to do. If they can't see eye to eye, what is the taxpayer going to do?
It's going to lodge an objection.
Correct. They're going to lodge an objection. Okay, and that objection is then going to be reviewed internally by SARS. So someone more senior is going to review your account, okay, for your business, and they are then going to decide, is this a fair assessment or not? Okay, because the large majority of assessments are processed not manually, electronically, digitally, without too much manual intervention.
Yes.
Okay, because they can be programmed. Right, but now if you don't agree with that, then there needs to be manual intervention. Right, so first place of call would be you as the taxpayer trying to seek remedy from the company, i.e. SARS.
Yes, sir.
Okay. If you don't agree with the objection, then what do?
Well, you can lodge an appeal.
Correct. Then you need to appeal it. Right, so appeal is when you're unhappy and you're going to now appeal that judgment in terms of the rule that they set. Someone else is then going to consider, well, does this have merit or not? And then if it does have merit, they'll try to resolve the issue. If it doesn't have merit and you still want to take things further, now we look at an alternative dispute resolution, which is something like an arbitrator.
Yes, sir.
Okay, an arbitrator is going to be looking at someone that's almost like a trusted third party that both of you agree on, that can overlook the case to try provide a judgment. And then you as the taxpayer and SARS as the tax collector will then agree that, well, whatever is ruled on by the third party will then apply to the situation. Do you agree?
Yes, sir.
Okay. And if you still don't receive remedy there, then what do? You go to the courts. All right, and then you go to the tax board, then the tax court, then the high court, and then ultimately you appeal that, and then constitutional court. So the only time something will come to the constitutional court is if you disagree
with the law.
With the law, exactly. Because do you agree, as a lawyer, okay, as the rule-setting body, can you change the law? No, you can't. The only party that's allowed to change the rule of law is government, parliament. Okay, because that needs to be voted on and so on.
Yes.
Okay, and that's as far as you can go in terms of disputes and process. Okay, got that?
Yes, sir.
Alright, then I've just put a diagram here again. It comes straight from the textbook. They're very, very good in terms of summaries. Right, so if you lodge an objection and it's rectified, well, then you accept the new assessment and everybody moves on. Okay, who is that dealing with? SARS.
Yes, sir.
Okay, the company and SARS will deal with that objection. Okay, if you don't agree, you can lodge an appeal. Right, if that appeal is unsuccessful, then you've got two things to consider. Either an unbiased third party that can rule, or the courts, depending on how serious the dispute is.
Yes, sir.
Okay. All right, and that covers the theory. Okay, it seems like a lot because it's a lot of basic background information. If you look at the textbook, let me just go here and just show you. You'll see Learning Unit 2 is just text and text and text of writing. Okay, here they give you background in terms of introduction. Right, they talk about the taxpayer, why you have to register. Okay, what happens after you've registered? Okay, after registering, you receive a return. Okay, documents for the return. Then you submit the return, and then that gets reviewed and assessed. Okay, remember the assessment is whose view? Whose view is the assessment? Yours or SARS?
It's SARS.
Exactly. SARS is the one that assesses what you submit and provide to the receiver of revenue.
Yes, sir.
Okay, then they talk about the learning outcome, they talk about background, they talk about registration of taxpayers. That was at 21 days after becoming obliged to register. We saw that. Tax return, I showed you e-filing, okay, because nowadays tax returns aren't really done manually. Yes, they can still be done manually, but because we're living in a world of technology, generally your income tax return is generally going to be processed via e-filing.
Yes, sir.
Okay. What is an assessment? It's SARS's estimate of how much you are required to pay. Do you agree?
Yes, sir.
Remember, the assessment is not going to be the taxable income. The assessment is going to be the taxable liability or the taxable refund. Do you agree?
Yes, sir.
Okay. Then the dispute resolution is here. We spoke about that. You saw that in the notes. Something else to talk about here. I don't know. Did it get covered here or later? It might have been covered later. Just to add something to the discussion. Burden of proof. Who is required to prove what the problem is?
No, so it is actually here. So I think just after the objection and appeal procedures, I think it does talk about that it must be the taxpayer, the person lodging the thing that must prove. And I think it says to some effect, it talks about the taxpayer. I'll look for it just now.
Correct. It depends on who makes the accusation.
Yeah, it's on page 32, so
yes,
you should know and understand the following about objection and appeal. It is the taxpayer's responsibility to prove that the assessment is incorrect.
Yeah, so let's understand that. Okay, so Unam, if you believe that your assessment is incorrect, who's the burden of proof with?
With me, sir.
Exactly. Okay, so if you don't agree with something and you want to raise that, you then have to provide the evidence. Does that make sense?
Yes, sir.
Okay. If SARS believes that you are not following the correct rule of law in terms of not declaring all your income or trying to make use of too many deductions, and they believe that you're not doing the correct thing, okay, what are they going to do? They're going to have to prove that what they've gone with is what's actually true.
Yes,
they're the ones making the accusation. Does that make sense?
Yes, sir.
Okay. Alright, tax payments and refunds that we spoke about. I try to give you an example there. Then they spoke about penalties that will apply if you don't follow the correct deadline in terms of paying your taxes on time. Tax practitioners are people that are registered that can provide advice and that can help you submit a return. And that wraps up that section. Okay, then there's some self-assessment questions here which you can look at when you've got more time. I want to quickly go through the assignment. Okay, assignment number 1. Alright, I think we've gone on for quite some time. Maybe let's take a quick 5-minute breather just to refresh before we jump into the multiple choice. The multiple choice goes very quickly because a lot of it we've already discussed. Is that alright?
No, I think if you don't mind, so let's start, because the thing is, my mom had asked me to pick up from the airport at about 8:15, so I'm just going to hope.
I don't mind going through. I just thought that you were getting tired. Okay. Yeah, so I'm fine to go through. I just thought maybe you wanted a break because it does get a bit overwhelming. But we can carry on. You don't have to take a break. It's fine. Okay.
Yes.
Question 1. In South Africa, taxpayers are taxed on a residence-based tax. We spoke about this last week. Do you remember what that involves? That
residents are supposed to pay income on their worldwide earnings or from their worldwide source.
Exactly. Good. Okay, so if you're a resident and you believe SA is your home, it doesn't matter where you go in the world, you are going to have to pay taxes on that. Right, so number
Yes,
one.
sir.
Residents are subject on their worldwide income. Okay, number two, taxes in South Africa are classified according to a number of factors. One of the factors is based on what taxes are levied on. Okay, so which factor? Which of the following is not a basis? So the others are. So we spoke about this in terms of consumption tax. Do you agree?
Yes, sir.
Okay, did we talk about specific transactions that have tax?
I don't remember, no, but
Okay,
I do
is
remember the
VAT
other
a
one.
transaction?
That's
Is
not
selling an asset a transaction?
Yes, sir.
Would there be tax on selling an asset?
Yes,
Yeah,
sir.
it's called CGT.
Yes, sir.
Okay, if you're buying goods, will there be VAT?
Yes, sir.
Yes. Okay, if you've got lots of estate, if you've got a big estate, which is wealth, would there be tax?
Yes, sir.
Yes. Okay, tax levied on proportional income. What is proportional income? That makes no sense.
Yes, sir.
Okay, you see which one's wrong?
Yes, I do.
Okay, number 4. Okay, proportional income means a portion of income. Okay, that's very strange. That wouldn't be a basis. Okay, SARS doesn't tax a proportion of your income. SARS taxes your income.
Yes, sir.
Company is taxed according to what method? Okay, that's easy. That you should know. How much is company tax in this country?
Progressive. Company tax is 28%.
Good. So is that regressive, proportional, progressive, or indirect? Come, easy one.
It's progressive, sir.
No, progressive means the more I earn, the more I get taxed. That's
Isn't it like that,
means,
sir?
when I progress. Proportional doesn't mean that. Proportional means
No,
what?
sir.
A portion of.
Oh, a company is taxed. Sorry, something about individuals.
No,
and
individuals. Yeah, individuals are taxed not proportionally.
Progressive.
Individuals are taxed progressively.
Yes, sorry, that's what I was thinking.
It's 2. Okay, because it's a set percentage. Okay. 4. Regards to interpretation. Okay, we spoke about SARS practice notes. SARS has practice notes because they tell you how they're going to treat something in line with the rules of law. So now, if you are going to be mentioning something, okay, in terms of the tax rules and law, and SARS is going to mention something in terms of the rule of law. Okay, are they binding? Can you? Does it act as an opinion? Can you interpret it? Does it form part of the act? What do you think?
With regards
So with regards to the
interpretation?
interpretation notes, the practice notes, which statement is incorrect? Is it an opinion, yes or no?
Well, yes, it's how SARS interprets
The legislation.
the legislation that is set.
That's definitely
Yes,
correct. Okay, does it set out how they will apply the provisions? Of course it does.
Yes, sir.
Because that's exactly what they're telling you, right?
Yes, sir.
Is it binding?
Yes, sir.
No, it's not binding. Binding means it's law, right? Do you agree?
Yes, sir.
If
But then
something
can
is
I ask
binding, it's the rule of law, right?
Yes, sir.
Is the practice notes rule of law?
No, sir.
No, it's not. It's not a legislation.
No.
Okay, does it form part of the Tax Act?
No, sir.
Of course not. Okay, it's not law. It's not part of the Tax Act. It's just someone's view on how they're going to treat certain things. Does that make sense?
Yes, sir.
Okay. 5. If your ADR is unsuccessful and
Yes,
it's
sir.
gone to the tax court, Where can the case be taken after that?
To the High Court.
Yes, we just saw it. Good. High
Yes.
Court is 2. When calculating taxable income, basic framework you saw it last week. Which one?
The basis, it's income minus your deductions and allowances.
Good.
Plus by capital gains.
Yes. Why would you add the capital gain? Any idea?
Well, it's because aren't you always taxed on what you, I suppose
profits.
well, what you receive, what you
100%.
receive.
That's exactly it. Okay, so
Yes.
a gain is a gain, which is a form of income, basically.
Yes, sir.
Right, which of the following statements is true? This is an easy one. We looked at this earlier in terms of a refund versus a liability. So when is a refund received? When your prepaid taxes are more or less than your normal tax.
And your prepaid is when you receive a refund. When your prepaid taxes are more than what you're supposed to pay.
Good, that's right. So number 1, the first one is correct. Okay, because if you read the first one, they state that taxes are more than excess.
Yes, sir.
Okay, the other one it's the opposite, that's wrong. And then later on they talk about owing. Okay, if it's owing, you're not going to have prepaid in excess. That wouldn't be owing, that'll be payable. And then if you're looking
Yes.
at owed a tax amount, read it here. It says net normal tax for the year less than prepaid. If it's less than, you're not going to owe SARS anything.
Yes.
Okay. 8. Which of the following tax is not considered a wealth tax? That's easy. Okay, what does wealth have to do with taxes? It's look at assets and liabilities. Do you agree?
Yes, sir.
Okay, so if we're keeping it simple, okay, wealth tax refers to assets of value. Okay, things that you own, your possessions. So does donations tax
Yes.
relate to that?
No, sir.
Yes, it does.
Well, it
'cause why do
does, sir,
people
because you're
donate?
giving away. You're giving away some of their wealth. Yes, sir.
Yeah, you're giving away some of your assets, don't you?
Yes, sir.
Okay, so that does fall under wealth tax. CGT,
Yes.
what does that get applied on?
Or the things that you gain during the year.
Good, and the things that get more value or that have a capital gain when you sell. Do you agree?
Yes, sir.
And what do we sell? Assets of value. So that's also a wealth tax. Excise duty applies to what?
I'm not sure. Excise
Imports and
duty.
exports.
Oh, okay.
Okay, that's looking at trading. Now that's looking at operations. That's not a wealth tax. Okay,
Yes, sir.
that's more trading operations. It's more operational in terms of tax. Estate
Yes,
duty,
sir.
we just spoke about that a few minutes ago. Estate is your wealth. Okay, you have to pay taxes when you die.
Yes, sir.
Definitely a wealth tax. Right, number 9. Where a provision in the Income Tax Act has 2 interpretations, the contra fiscum rule applies. This means the court will interpret the provisions in terms of the interpretation that places. Okay, we're going to have to find this. Contra fiscum. Let's just search here. They've asked some really detailed tax stuff here in terms of Latin terms that relate to the legislation. Okay, so let's find it. Okay, there's it. In the tax study guide, apply the contra fiscum rule. According to this rule, where a provision of the Income Tax Act has 2 interpretations, the court will interpret the provision in terms of the interpretation that places the smaller burden on the taxpayer. Okay, there's that burden of proof stuff.
Yes, sir.
Okay, so this is applicable to who? The
To the taxpayer.
Smallest burden of proof. Smallest burden
Yes.
on proof, taxpayer 2.
Yes, sir.
Okay, 10.
Yes, sir.
The new State Areas Ltd Commissioner for Inland Revenue was ruled in which court? Okay, this is very specific theory. We're going to have to check for the New State Areas Act. Did you find anything in that first chapter?
No, sir. The first 2 chapters, I don't see anything.
Okay, so it might have come up in a later chapter. If I just type in new areas, what is it? New areas what?
Didn't see. New Areas Act.
New state areas. New
New
state
state
areas. New state area. Let's see if what comes up. Okay, nothing comes up. All right. Do you have your tax textbook nearby, Unam?
No, sir. I haven't purchased it yet, sir.
Oh, okay. You haven't got it yet. So, the tax acts are quite specific because they test your knowledge and understanding around the background information regarding the legislation. Okay, so if we're looking at the new state areas let me go back to that. Here's it. The case, New State Areas Limited versus the Commissioner for Inland Revenue. Okay, is this a case between a company and the commissioner? Yes. Okay, and this was done in 1946. Obviously, this was the date. Was ruled in which court? Okay, so you get different courts. Obviously, the Supreme Court of Appeal, Tax Court, Constitutional Court, and then the Tax Board. Right, we're looking at something that relates with the commissioner and with the New State Areas Act. So, looking at this, I don't think it was an appeal. It's either going to be the tax court or the constitutional court, because things like this don't necessarily go as far as the Supreme Court of Appeal. Right? It wouldn't go that high. It would probably stop at constitution or maybe the tax court. Remember, appeal is when there's a judgment, and then if you're not happy with the judgment, then it's going to go further in terms of, is it ethical or not ethical?
But then, so wouldn't you say that then it's probably between a tax court and a tax board? Because if it didn't even reach the Court of Appeal, then it surely wouldn't have reached the Constitutional Court either.
Well, it depends. The Constitutional Court is if it's actually something that's going to be affecting the law. If you don't agree with it in terms of the legality of it. So I think tax court would be right here. But when I searched, nothing came up when I searched for new state areas. That's why I'm not too sure if they're requiring you to actually download and read through the cases. That's going to take quite a lot of time and effort to do. So I'm not going to do that now because you're in a little bit of a hurry. So I'm going to put an asterisk here. I will find the case, okay, and then I'll send you the right answer. Okay, I try to find it now by searching in the study guide. When I typed new state areas, nothing came up. Let me try one more time. Let me type in Commissioner for Inland Revenue. Let's just do that. Commissioner. Okay, let's see if it comes up. Because I did briefly scan through the first 3 chapters just to see if there was anything. I didn't find it either. That's why I was just asking if you found anything. So yeah, here's just the Commission of Inland Revenue. They're just describing what they do. And then that's it. See, next, nothing. Okay, yeah. So I'm going to have to find that one. I'll send you the final version of the answers once I've confirmed it. And then you can submit that before next week. Okay, so next one. Taxpayer objects to an assessment, the burden of proof. Okay, we just discussed this not so long ago. Burden of proof is liable or not liable upon who if the taxpayer objects?
If the taxpayer.
Yes, definitely. Taxpayer objects, taxpayer must prove it.
Yes, sir.
Okay, question 12. Dealing with an objection to an assessment, business day is defined as. Okay, that's not normal business day that we have normally. Okay, so obviously business means work days. Okay, so a day including Saturday, no. Any other day other than Sunday and a public holiday, that would apply. Public holiday, yes. Saturday, Sunday, and a public holiday, number 4. Okay, that's just normal, like everyday life common sense. Do you agree?
Yes, sir.
Okay. What else? 13. If the taxpayer has provided a written reason by SARS for a particular assessment, the taxpayer must object to an assessment. Okay, this is we looked at this last week. Objection must be given within how many days? Do you remember? We spoke about it last week. 30 days.
Was it within 30 days? Yes, sir.
Yes, it is 30 days. Correct. Okay, it was in the notes from last week. You have 30 days to object. 14. With regards to the objection procedure, a taxpayer must follow when a notice of appeal must be made by a tax. Okay, so what do we do after this? After the notice of appeal, think back to that diagram that you just saw. An objection means what? We're not happy with who? The SARS assessment. Do you agree?
Yes, sir.
Okay, so if I'm objecting, what happens after that? When can a notice of appeal be made?
When can it be made? Can you say 30 days after?
No, that's the time. This is looking at when can a notice of appeal be made by the taxpayer. So after reasons of a particular assessment has been provided by SARS to the taxpayer, after the due date per the assessment, after the matter has gone to the tax court, or after an objection has been disallowed. Think about it. When do we appeal? When we don't agree with what?
With what SARS is or with the judgment, wouldn't it be?
Yes, with what they've said. So if the objection was disallowed, if the objection was not disallowed and they rectified it, then you would agree with it, wouldn't you?
Yes, sir.
Okay, if the objection is disallowed, then you want to seek further remedy. Do you agree?
Yes, sir.
Okay, next. Rent-a-Toy would like to know if they qualify as a small business corporation. Okay, SBCs you don't know much about yet because we haven't covered study unit 3 yet. Okay, so I'm going to answer this one for you. Alright, you are provided with the following information. Gross income. Okay, so there is a very specific list of criteria that you will see next week regarding what determines a small business corporation. Okay, the most important thing with a small business corporation, the nice thing about that is you are considered to be a smaller business, and if that's the case, you actually get more benefits in terms of further deductions and allowance and all of that. You'll learn all about that later on.
Yes, sir.
Okay, so the most important thing here is on what grounds does Rent-a-Toy qualify as a SBC? Okay, it has no investment income. Zara owns shares in a listed company, so it does not qualify. Doesn't qualify. That's what they want. So if they don't qualify, that means that they're not meeting the requirements in terms of the SBC. Zara owns shares in a listed company. That's already a key here. Does she own shares in a company? Yes, she does. Two Sisters Toyland are the only shareholders of a CC. Zara owns 5,000 shares in a listed company. That's out. Once you start owning shares in other companies, then you're no longer small. Okay, we'll look at the criteria. So that one's out. 2 is out. 2 is incorrect. Rent-a-Toy Limited is a company. That would be fine. And Toyland is a shareholder. What is Toyland? Toyland, Zara and Sophia are sisters, and Toyland are the only shareholders. Okay, that's also out. So there's actually 2 answers here. I don't know why they want you to choose one. Was there multiple choice here? No, there wasn't. Ooh, okay, that's a problem. Okay, 2 and 4 are actually correct. Okay, next week we'll discuss it. 4 is correct because only natural persons can be shareholders. That's something else that you need to check. Okay, it's specific. It's in the textbook. It's in the study guide. They talk about the criteria for an SBC. Okay, you have to be a natural person. Okay, so the answer here is actually 2/4. Okay, both are applicable in terms of grounds where Rent-a-Toy would not qualify. Okay, Rent-a-Toy would not qualify because Zara owns shares in another company, and also shareholder is not a natural person. That's also bad. Okay, 16. Which of the following persons with a qualifying turnover that does not exceed 1 million is excluded from the definition as a micro business. Okay, this is easy. This is just theory. We'll learn about it next week. If I'm looking at a micro business, we're looking at a small business. Okay, a company can be a small business. A sole corporation can be a small business. A sole trader can be a small business. A trust isn't a business. A trust is something completely different.
Yes.
Okay, you might have heard of a trust. A trust is what very wealthy individuals use as a way to try reduce their taxable income, because that's part of their estate planning. Okay, that's beyond the scope,
Yes.
but I'm just mentioning it. 17. Which of the following is not a taxpayer for income tax purposes? That you should know. That one you can answer for me. Which one?
Which one is not a taxpayer for income purposes? It's a partner in a partnership.
A partner is a taxpayer.
Or a partnership.
A partner pays their own taxes.
A partnership. Yes, sir.
Which one?
A partnership, sir.
100%. Yeah, a partnership isn't a separate taxable entity. Nice. The rest
Yes,
are.
sir.
Okay, what do we have here? Kloof qualifies as a micro business and is taxed on the turnover tax-based system for the 2018 year of assessment ending 28/29 February. It had taxable income and taxable turnover of this. Okay, I think you know what I'm going to do with these questions, the question that we haven't looked at, I'm not going to maybe like waste your time now and go through it in detail. What I'm going to do is I'm going to carry on with the video after this. I won't stop the recording. I'll just carry on recording, but I'll come back to these ones and then I'll actually like work through it like in detail, and I'll record it, so you can always watch that later on, because this is looking at the CC tax, okay, in terms of liability. Right, then I'll discuss it. I'll send you the complete working so you have all of that. Next week I'm definitely going to cover it in terms of theory, so then I'll show you the details there. Okay, I just want you to cover the questions that you can answer. The ones that are a little bit longer, I will do those for you. I'll just carry on the recording after we've covered more of these, okay? So you can go fetch your mom from the airport. You still there?
Yes,
Okay, I lost
still
your voice
here.
there.
Sorry, I had the microphone switched off
Yeah,
because I was
that's
blowing
fine.
my nose. Sorry.
Okay, no problem. Okay, 19. Kloof Cafe estimates taxable turnover of that. Okay, this is again first interim payment. We're going to look at this next week. It's in chapter 3. I'll do this one again later for you, and I'll record it. So this is a provisional prov payment.
Yes, sir.
20. This you can do. No, this you can't do. It's micro businesses. After next week you can do it. It's just theory from the textbook. I'll give you a list. It's in the study guide. It should be there again this semester. I doubt it would have changed from last year. The micro businesses are very specific. Okay, out of the budget speech, nothing was really mentioned about this in terms of micro business. And legislation was consistent last year because we're using last year's tax tables. So with regard to micro businesses, which of the following amounts will not be included in taxable turnover? Okay, taxable turnover is looking at what will a micro business, so a small business, there's even more benefits if you are considered micro. Micro means very small. So we have SBC, we have micro. Those are two classifications that give businesses additional benefits. Okay? According to the theory, received amounts, if you're a micro business, that would have to be included. Anything that you receive must always be included. Number 2, 50% of all capital receipts in nature, receipts of capital nature from the disposal of immovable property. Okay, that's out. Okay, if something is capital, you wouldn't include 50% of it, so it would be excluded, not included. Received amounts from business activities in the Republic, definitely. That's like normal income. And then accrued amounts, yes. Okay, so number 2 is the right answer here. That's just basic theory from chapter 3. Okay, 21. Let's see what that one's on. How many questions are there? Are we almost done?
Probably 25.
25? Ooh, 30 looks like it. Yeah, okay, it's 30. We're almost there. Last 10 questions. 21. Let's see. Final tax liability of assessment. Okay, this is second provisional payment. I'll do this one for you. Okay, prov payment, tax liability. Actually, we can do this one already because we just spoke about but we didn't work it out. I don't think I worked out the liability. A private company has taxable income. What is the company's final tax liability? Well, it's 28%. Yeah, we can actually do this one. This one's quick. Okay, so income is 175,000. Okay, the company made first and second provisional tax payments. Okay, income will be taxed at what? 28%. That gives you the tax liability. Okay, it gives you 49,000. Right, then you less prepayments. Prepayments in the form of second and provisional tax payments.
Yes, sir.
Okay, does that make sense? So second provisional tax payments, first provisional is 23 plus 10. Okay, gives you 33.
Yes,
so how much they end up paying? The difference. Tax liability of 16, option 3. Okay, yeah, that one was actually simple. Right, it was actually looking at what we spoke about earlier, which was that tax liability calculation. Okay, all we had to do was just apply the tax rate for a company, which you already told me earlier tonight. You said that was 28%, so that's perfect. That didn't change, even with the budget that we just had not so long ago. 22, first prov payment. This one I'll do for you. That takes some time to do because there's a few calculations you need to consider. 23, handyman is a sole proprietor, trader. Would like to know if he qualifies as a micro business. Its first year of operations was from 1 September 2017 to 2018. Okay, in that period he received 645 solely from services rendered. Which of the following statements is correct relating to handyman status with regards to the qualifying micro business? Okay, this you could actually answer based on what we just read a few questions ago. When looking at a micro business, you have to be less than 1 million rand in terms of turnover. Okay, so it qualifies as a micro business as its receipts of 645 are less than 1 million, option 1. You have to be less than a million. Very, very small, micro business. Okay, that's question 23. 24. What are they looking at here? What is Cake Co Limited qualifying turnover? Okay, so qualifying turnover is looking at what would be part of the calculation when looking at micro businesses. Here you were given the catering services, and included in this amount is 32,000 received in cash from the sale of some catering equipment. Okay, we just spoke about this. You cannot include the sale of capital assets, capital in nature. Okay, so the sale of equipment is capital in nature, not included. So they would only include the 342,000. That was the only amount that we had here. Hey, yeah, Cake would qualify as a micro. They receive cash amounts. Yeah, 342. That's it. Option 2. 24's answer is 2. 25's answer, let's check. A company qualifies as an SBC. For the year of assessment during 31st December, it has receipts of 1.3 million, taxable income of that. What is the tax liability of the company for the year of assessment? Okay, that's very, very simple. I just need to open up the budget guide. I haven't opened it. Let me quickly open it. What did I open here? Oh, sorry, wrong file. Wrong file. Where's the budget guide? Here's the budget guide. Okay, there we go. Tax budget guide. Where's SBC? Retirement lump sums should be on the next page. Income tax, capital gains. There's it. Okay, let me blow this up a bit bigger so you can see it. Okay, there. Income tax for small business corporations. 1st April 2017 to 31st March 2018. That's what's applicable here from the tax tables from last year. Okay, let's go back to the question. A company qualifies an SBC for the year of assessment ending that. It has receipts of 1.3 million and taxable income of 543. That's what we're going to be using, taxable income. Okay, because SBC is using taxable income. Okay, so 543, let's write that down. 543,543 taxed as per the SBC tables. Okay, if I go back to the tax table, which I emailed to you, I'm looking at, what do you call it now? Sure, I lost the word. The scale. No, scale's not the right word. What do you call these things? Scope. No. Level. I don't know. I forget.
Scale.
Sorry, say that again?
I'd say tax scales. I don't know.
Tax scales. Yeah, possibly. Okay, so that's the level we're at. Do you agree?
Yes.
Okay, 543 is between that period. Do you agree?
Yes, sir.
Okay, so I'm going to copy that, and I'm going to paste that there. Right, and then what am I going to do? I'm going to calculate it. Okay, so they said excess above 365 is, how do I get the excess? Simple. I take 543 and I subtract 365. That gives me the excess. Taxed at 21%. Okay, so this times 21% gives me that. Add the 20,248 equals this plus 20248 gives me that answer. Is there an option for 576? Yes, 57628, option 2. Okay, that's just using tax tables. We'll use them a lot. Okay, that was just your first example. Don't worry if you didn't quite follow. I'm going to do lots with you later on. Which of the following statements is incorrect with regard to trusts? Okay, this is looking at a trust. A trust is a separate legal entity and therefore a separate taxpayer. A trust is a separate legal entity,
Yes.
and it is a separate taxpayer. A trust is taxed at a flat rate of 30%. That comes from here.
False.
Go back to your tax tables. Just want to show it to you if I scroll further up. There's it. Trusts other than special trusts are taxed at a rate of 45%. Do you think that's correct?
No, sir.
No.
They said 30%.
That's out. Okay, so 2
Yes,
would
sir.
be incorrect. It's 45%. See tax tables. Okay, the profit earned by a trust must be distributed to the beneficiaries. The trust deed stipulates it. That's true. A trust deed is a legal document drawn up by the original donor of the trust. Correct. That's theory. Okay, the rate was wrong. Okay, 27, last 3 questions. Company, not a SBC as defined, must make its first PROV payment. Okay, don't worry about PROV payments. I'm going to look at it in detail next week with you. Okay, it is quite a long calculation. I'll do that one for you just now, and then I'll record it. Okay, 28. Apply the same facts set out in question 27, except assume the latest assessment. Okay, this is also PROV payment. I'll do that one for you. I'll record it. We'll discuss it in more detail next week when we cover the theory. I'll come back to these questions and discuss it with you. Okay. Alright, question 29. What amount should the CC use to calculate the second provisional tax payment? Don't worry about that. We'll need to cover theory before you can answer it. And then the last question. Which one of the following statements is not a requirement for qualifying as an SBC? Okay, this is again very, very specific theory that comes straight out of study unit 3, which is next week's content. We'll look at it. Which of the following statements is not required as an SBC? Okay, so with an SBC, we need to look at requirements that relate to a business that's larger than a micro business, okay, but still small, that can be classified in its own group. Qualifying as a small SBC, gross income must be less than 20 million. As far as I can remember, that was correct. Let me just double check. I'm not too sure if it was 20 or if it was 30. Let's just check it. Small business corporation. Small business corporation. assume qualifies as calculate. Okay, no, that's not it. Assume does not qualify a micro. How? Okay, no, that's not it. Oh, there. List the requirements. There's something that can help us. The one just before this. There. List the requirements of a small business corporation as at 28th of year of assessment. What question number is this? Question 3.7. There, 3.7. Here's it. Oh, okay, brilliant. This is a nice summary. Here's it, Unam. Okay, so
Yes, sir.
gross income must be less than 20 million. Okay, it was 20 million, so that was fine. Okay, so gross income is less than 20 million. That's correct. Shareholders must hold shares in other companies. Shareholders must never hold shares in other companies. Alright, if they want to classify themselves as an SBC, that one's always out. Same as micro business. All the shareholders must be natural
Yes.
persons, definitely. Same as micro. Investment income and income from rendering of a personal service must not be more than 20% of total revenue, receipts, and capital. Let's go back. Should be here. There's it. Yeah. Okay. See, none. None of the shareholders must hold shares in other companies. It's always the case. Micro and SBC are identical. Okay. You'll see a slide in the note that I will send you that give you the comparison. Okay. None of the shareholders must be other than natural persons. Okay, not
Yes.
natural persons. Well, natural persons as well as not holding shares. Those are the two criteria. Okay, so which is it? Not a requirement. Number 2 is not a
Number
requirement. Hold on, is that right? Which one of the following statements is not a requirement? Yes, the rest are requirements.
Yes.
Number 2 is not. The shareholders
Yes.
must hold shares. That's false. So I'm just reading it. I'm getting myself confused, but it's right. Okay, the shareholders must not hold shares in other companies. Okay. Alright, and that's the questions. Okay, so depending on how you marked the right answers, if you were going with me and you were just circling and highlighting in your book, great, that's fine. I'll email you the set of slides later tonight. I'll have to film how many? 1, 2, 3, 4, 5, 6. 6 questions. 7. Okay, I'm going to film 7 more questions.